Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started. Hello, and welcome back to another episode of Alternative Investments Chat. Today, we're going global. We're diving into the alt investment hotspots outside of the United States here, which markets are heating up, and where the real opportunities and, of course, where those risks are.
Yes, that's right. As we know, the U.S. is still dominant in a lot of alts, but perhaps what's most exciting, as Americans tend to take interest in, foreign affairs, the most interesting growth is possibly outside of the U.S., happening overseas in emerging markets with infrastructure expansion, renewable energy, agriculture, private credit in Latin and Asian America, and more. We're going to get into all that. Let's map it out.
All right. So before we go any further, I think it's clear this up a little bit. What do we mean when we actually say global arts? There we go. Global alts market. I like art too. That's part of it. What are they actually talking about? So, because if you're like me, it sounds like a place where people trade Bitcoin for Bordeaux or maybe pizza. Remember that guy who in 2010 he paid 10,000 Bitcoin to get some pizzas?
Yeah, I remember that.
Keep that in the back of your head. We definitely have episodes on that and crypto, so you'll need to tune into those here pretty soon.
Yes, exactly. They're good episodes, so stay tuned. But here's the deal. The global alts market isn't a physical place, right? It's a massive ecosystem of investments that live outside of the traditional stock and bond world. Think about private companies, private credit, real estate, infrastructure, commodities, collectibles, blah, blah, blah. All of these things that we talk about, and all of it happening everywhere from New York to Nairobi.
Wow.
It's huge, diverse, and it's growing. And in fact, depending on who you ask, the global alternative market is worth somewhere around $20 to $25 trillion today, and could hit $40 trillion by the year 2030, which is not that far away.
It's not. That's scary, and that is a lot of money. So what makes it global is that investors from everywhere are getting involved. So in fact, this is a perfect segue, if you ask me, to talk about where the party's actually happening, because, spoiler alert, it's not just in New York and London anymore. Okay, those were the big spots. So let's take a little world tour to kind of introduce our listeners to where things are happening. So, of course, stop one is going to be New York, of course. So it's home of the skyscraper, the bagel, which I personally love, but also about half of the world's private equity funds. The U.S., like you mentioned, still dominates the alts landscape. Roughly half of all global alternative assets are managed here in New York. Think hedge funds, private credit, and venture capital. If it's high finance or high risk, it's probably started here. New York, she's the OG, right?
Yeah, we got a whole finance district, FIDI.
Stop two, just a little hop over the puddle or the pond, as they call it.
Puddle.
It can. Well, I mean,
depending on how far you can jump, I guess it could be a puddle.
The pond. We'll stop over at London. So, where this city used to mean alternative investing was investing in a vineyard in France. London's is a crossroad linking North America capital with Europe, African, and the Middle East. So you've got tons of infrastructure funds, private debt, and real estate investing. Plus, post-Brexit, if we remember that time,
I remember.
London's leaning harder into the fintech world and private markets to keep its global edge. Why don't you take us on the second half of the land here?
Yeah, let's do it. So stop number 3, we're going to go to Dubai.
I want to go.
This is where, according to you feel like the skyline looks like a little toddler built it with some Legos.
Yeah, $1 billion worth of Legos. But I mean, if you ever look at the skyline of Dubai, I'm like, why? It looks like a Lego set.
Yeah, that's and now I can't unsee it. Now that you brought that up, I can't unsee it. But Dubai has become an emerging global hub for private wealth and sovereign capital. I think that, we've heard a lot of stir about Dubai recently, and not just Dubai chocolate, especially for all the money that's coming out of this place right now. So the big Middle Eastern funds, let's think about Abu Dhabi Investment Authority, Mubadala, PIF in Saudi. They're pouring billions of dollars into global private equity, infrastructure, and technology too. They are taking oil money and turning it into opportunity money.
Yes, they are.
It's like a little, renaissance happening over there.
Big time. Still want to go too, not just for the chocolate.
And
I
not,
like my
and
San
not just
Francisco.
for the Legos.
Not for the Legos, yeah. I still like my San Francisco chocolate, Ghirardelli, but we'll let the chocolates duke it out in a later episode.
Yeah, exactly.
But I still would love to go to Dubai.
Yeah.
I hear it's stunningly beautiful.
Yeah, I have too. And, the chocolates are definitely having a moment right now. Can you tell I'm hungry?
Yeah.
They're investing there not just for returns, right, but also for economic transformation. Let's think about energy transition, logistics, and clean technology.
Yeah.
Then we're going to stop over in Singapore. This is where everything's clean, right? That's what everybody thinks about Singapore when they think about it's efficient, and it's quietly becoming the Asian capital for alternatives. Singapore is big on private credit, venture capital, and fintech infrastructure. It's the bridge between Western investors and the booming Southeast Asian markets.
Wow, I had no idea.
Yeah, I really want to go to Singapore.
All of the places on this list that we listed, I would love to go. So
Exactly. And now we're heading to Africa, another
go.
place I'd love to go.
Yes.
Africa is where all the real alts action in infrastructure and energy is happening. Roads, ports, solar grids. It's an investor's dream for long-term tangible returns.
Yeah,
and if you have any questions about those sorts of investments, you can check out our episodes.
Yes.
Global funds are pouring in, and it's not just for profits, but to help drive development and stability, which we know that there's a lot of potential for development in Africa as a continent as a whole, right? So it's really exciting potential for growth out there, and it's paying off. Infrastructure funds in Africa are seeing steady yield and massive growth potential. Okay, I need to take an in-flight snack break. I'm going to choose the pretzels today. So why don't you finish off our tour?
I would love to. Stop 6, in fact, another place I would absolutely love to go, Tokyo and Hong Kong. So these two are the quiet players, but the money runs deep here. Do not be fooled.
Deep pockets.
Yes. So Japan's pension giants and insurance companies are diversifying into private equity and credit to escape low yields. Meanwhile, over in Hong Kong, even with all the shifts that are happening, still acts as a bridge for Chinese outbound capital. So they may not be the loudest in the room, but you can probably bet that they paid for the room, if you catch my drift. And finally, we've got our stop, the last stop, which is everywhere else in the United States and the world and the country and all over. So from Latin America's fintech boom to Australia's infrastructure funds to retail investors in the U.S. buying fractional real estate, alts have gone mainstream.
Sure.
Now we've seen where the alts action is actually happening. Time to talk about the why. Again, what our listeners want to know. Why are investors so eager to take their money overseas? Well, let's talk about a few of those driving forces.
Let's do it.
So reason one, our favorite reason, is we have diversification. You know how we love to always talk about making sure that you have a lot of things in your portfolio. So by investing in overseas, investors can balance out risk. So maybe like their U.S. tech exposure is offset by renewable infrastructure in Europe or logistics hubs in Southwest Asia.
Sure.
Or Southeast Asia. There we go. Somewhere over there in that continent, right? So basically it's like having multiple friend groups. So if one group says, hey, we're going to bail on brunch, you at least got somebody else who's going to go to lunch with you maybe, or go to happy hour. You got a little bit of best of both worlds, right?
Yeah, if you can't tell yet, you think a lot in terms of happy hour, dinner,
brunch,
yes, things are categorized.
Food.
Yes, it's like, where's the next happening meal
Exactly.
going with the vibe? That's what you're after.
I love that. You know, I'm a people person. I love to be out amongst the people. So next thing we have is reason number 2 is yield hunting. So interest rates in some developed markets are cooling off while growth and returns overseas are still actually pretty hot. So private credit in Asia, infrastructure in the Middle East, in frontier market agriculture in Africa, all offsetting yields traditional Western markets can't actually match right now. So,
yeah, exactly. So you get a little bit of the best of both worlds, Hannah Montana style.
I never watched that show. I'm sorry.
Mix it all together, and you know you got the best of both worlds.
I'm just going to let that go because
thank you.
I mean, I only know I do like Miley, but not on the show Hannah Montana.
Yeah.
Sorry, I wasn't a Nickelodeon kid that much.
Yeah, that's
Darn
she
it,
was
I missed
Disney,
the good one.
but that's
Oh,
okay.
was she Disney?
Yeah, definitely Disney, but
See,
that's okay.
don't sue me, Nickelodeon and or Disney,
It's
because
okay.
I missed you.
It was definitely during my time, when I was watching the Disney Channel.
I love it.
Okay, so let's continue with our reasons here. Reason number 3, real assets. Investors want tangible stuff. Those things we talked about, ports, wind farms, data centers. These aren't just digits on a screen, right? These
Watching
are
them go.
actual things that can generate attractive returns and exist in the real world. The global shift towards infrastructure and sustainability projects means that overseas markets, especially emerging ones, are the front lines of growth. Like we mentioned in Africa, lots of opportunity for growth there.
Yeah.
Then there's the simple fact that growth is global, which is actually reason number 4. We know that populations are expanding, middle classes are rising, and entire economies are industrializing. Still, we're past the Industrial Revolution, but it's like it never ends.
Yep.
And I have a feeling that some of the best investment stories of the next decade might be coming from a place that you've never heard of, or might even struggle to pronounce.
I bet that I struggled to pronounce half of the town's names here in the United States, let alone over in Germany or somewhere else. I'm like,
geography
Schwitzenberg,
lessons.
where is that?
Yeah, geography lessons in the U.S. basically unheard of.
Oh yeah, no.
So we need some more practice in that area.
I agree.
But that's about half the fun, right? You get to learn more about new markets, maybe even try some new food, still hungry, and also new tax forms. Yay. But it's all a part of the adventure.
I agree.
And finally, tech. This is our reason number 5. Technology made the world investable.
Yes.
Digital platforms, blockchain, and fintech infrastructure have made cross-border investing as easy to do as making an order on DoorDash.
Yeah.
Sitting in
Just
your PJs.
Sit in your jammies.
Which is another one of your favorite activities.
I know. I say I'm a woman of the people and love to be out, but I also love equally being in my pajamas at my house.
The people in your home.
There we go.
Your boyfriend.
Yes. One whole human.
One whole person. That's perfect.
Yeah, you can come visit.
Yeah.
Gotta be in your pajamas though.
Okay, I can do that. Pajama party. Anyone who has Wi-Fi, right? They all of a sudden have access to all sorts of things, and they have a tolerance for disclaimers and can invest globally. Tokenization, fractional ownership, and digital KYC, know your client, have opened the floodgates. And it's not just about institutions moving billions, it's individuals who can move thousands now across borders. And that's something to pay attention to. So far, we have painted the global alts market as this exciting buffet of opportunity.
A little bit of this, a little bit of that. I'll put a little shrimp cocktail. Let's hope it doesn't make me sick.
Yummy. Fine wine, fancy cars, solar farms. And I bet you didn't know that fine wine and solar farms went together, but they do.
They do.
And billion-dollar vibes, right? I want to feel like those really fancy people in Dubai. But if you're like me, I'm thinking to myself, okay, so I want to be the fancy people in Dubai, but what's the catch?
You're asking the 100% the correct questions because I think that way all the time. It sounds so glamorous until you realize that the risks are about as fun as, I don't know, reading a tax treaty in the dark.
I don't want to do that.
I don't want to read one, and I definitely don't want to do it in the dark. So let's talk about the cons, or at least the realities of investing in alternatives globally, okay? So first on our list, and our least favorite friend, illiquidity. Look at there. And at least in this episode, I can say illiquidity. Tune into our another, again, shameless plug here. We have a phenomenal episode where I cannot say the word illiquidity for the life of me
today.
And we have lots, we talk about it often. So go back, listen to those episodes. We'll wait.
Welcome back.
Yeah. Thank you for watching all of those. We appreciate that. So remember, unlike stocks where you can just sell them in seconds in your pajamas on your couch, some global investments have lockup periods of 5 to 10 years.
Yep.
And even if you can sell early, it's often at a steep discount. Again, you're taking the hit for getting out of it slightly early, and that's not good. Next up, we have regulatory risks. So every market has its own rules, reporting standards, and political quirks. Some emerging markets have evolving legal systems or unpredictable policy changes. So doing due diligence in a new country means understanding local laws, taxes, and governances. It's probably best to partner with somebody there that understands those if you're going to get into that realm.
Go with the experts. That's always our
like
suggestion.
A sommelier. If you don't know what wine to order, ask the expert.
See, there we go.
If you don't know what global alts, in that region, ask the experts.
Exactly.
Right? So another big one is actually currency risk. So if you're investing overseas, you're not just betting on the assets, you're betting on the currency.
Right.
So the investment might be like a really, really good, but if the local currency tanks against a dollar, you could lose money anyway.
Exactly.
So even small exchange rate swings can eat into your returns, especially in those emerging markets that we were talking about. So basically what I'm saying is don't fall in love with your returns until you actually convert them back and you see what you made.
Very good point. Definitely some good advice. And I probably, that's something that I wouldn't have thought of. A lot of people probably haven't thought of is the currency exchange portion of it for sure. Something else to think about is the complexity. From cross-border structures, tax treaties, local partnerships, and multiple layers of fees, global alts can get really messy. And not to mention that you might not speak the same language. Unlike public markets, there's no centralized data feed or daily price updates. So that can be a little bit difficult. You might not be able to get onto an app and just check on your investment. You might actually have to, correspond with these people, maybe send an email. Hey, how's my investment doing? And again, you might have a language barrier there.
Little old me over here, I gave you some money. How's it doing?
Exactly. And, Google Translate can only go so far.
That's true. Trust me.
Transparency also can vary. And that's true of alternative investments that you invest in your local markets, not to mention globally, right? Some global alts are highly institutionalized with detailed reporting and others maybe not so much. And next up is the big macro stuff. This is things like political shifts, elections, wars, sanctions, currency controls, all of which can affect your risk calculus overnight of whether this is a good investment or not, or a safe investment. Even if your investment itself is solid, the environment around it might not be. If you happened, especially to invest, maybe you're 5 years into a 10-year investment and war breaks out, it's not ideal. Global diversification spreads risk, but it also spreads uncertainty. So that's just something to think about.
It's true.
And we can't forget about fees, everyone's favorite thing. Global deals can often involve multiple intermediaries. Think about local managers, funds to funds, legal teams, maybe a translator.
There you go. Throw that one into your fees.
Exactly. But everyone wants their slice and should be paid. But obviously, by the time your returns come back, that might be eating into your profits. And the actual investment itself might have gone through more hands than your passport. Lots of stamps.
Lots of stamps. Well, especially if we're taking that little tour that we gave earlier.
Exactly. So it's extremely important to read the structure to fully understand who gets paid and when, and you need to really utilize that information to weigh out, is this investment even worth it?
Because those people definitely are going to want their money.
Absolutely.
And they're going to come for it, trust me.
And they should get it. They're doing a job.
I agree. And something else I want to add here is translation risk. We kind of mentioned it. So sometimes soon in one language means next quarter. Culture, communication, and businesses norms vary across all the markets. So it's very easy to underestimate how those differences affect timelines, expectations, and deal flows. So never assume the word yes means yes right now. Okay, now we've scared all of our listeners. We gave them this beautiful buffet, and now we scared them away.
And we took it away.
But you can still invest. So let's talk some of the strategy. So step one, my favorite, education beats enthusiasm, okay?
Yeah.
Learn before you leap. Before wiring money for that whiskey barrel over in Ireland, read the docs.
Yeah.
Twice, 3 times, 4 times.
Consult.
Get an Irishman to sit next to you. Make sure the Irish know what you're doing with that whiskey,
whoa,
okay?
I didn't know you were going to pull out an accent
Irish,
today.
I love them.
Oh my gosh.
I didn't put that one on my stop. Ireland, we need to go.
Yeah.
No, step 2, again, partner with the locals. Get that Irishman over here to help you. On the ground expertise is absolutely priceless. They know what is going on. Think of it as a tour guide for your money.
Yes.
Okay.
Exactly.
You don't want to just be out there.
Yeah, and I love an Irish tour guide. That's going to be my pick of the litter. No matter where I go, I'm going to want an Irish tour guide.
It's not going to be me because I can only say Irish. That's about it. That's the extent of my accent.
We'll work on it a little bit, but I liked it. I was not expecting that at all. You're not usually one for accents, so I liked that.
It's Australian or Irish.
Perfect. You're right, though. Nobody wants to be wandering around aimlessly. But step 3 here, diversify globally by sector. Balance your portfolio's time zones, okay?
Yeah.
Think about the eggs. Think about the baskets. No one lives on private credit alone.
Nope.
Step 4, use technology. We have these amazing tools. Use them. Platforms like iCapital, Case, or Moonfair give access and transparency, can help you really understand more about what you're potentially investing in that market. And tokenization can let anyone own a slice of the world, if you want to think about it like that.
Right.
And finally, patience. Patience is a virtue.
Yes.
Alts are slow cook recipes, not instant noodles. I like that one.
You know,
Yeah.
I'll eat instant noodles, but I will wait for a good bowl of ramen anytime.
Yeah, for sure. Global alts connect finance to the real economy, clean energy, infrastructure, and innovation. You're not just investing in assets, you're investing in progress, and hopefully that progress turns into returns in your portfolio.
Yeah, we have to remember that the global arts, I keep wanting to say arts, the global alts market is massive. It's messy, and it's rewriting the rules of wealth.
Yep.
It's where curiosity, if you ask me, meets compound interest. So be bold, be informed, and think beyond those borders. Opportunities are absolutely everywhere if you know how to read that fine print, and don't forget to read it.
Yeah. And hopefully you know how to read. I would say if you don't know, maybe let's go there first.
Let's start there.
Let's start at reading. Yeah.
Hopefully, if you're listening to this, you know how to read, because you had to read what the podcast was about.
Yeah,
So
let's hope. Thanks for tuning in. We hope that you learned something new, as always, or maybe at least wrote down some questions. Maybe this got some wheels turning, and now you have some ideas about different conversations you want to have with your wealth advisor. Don't forget to subscribe and maybe share this with somebody who might learn something new or is just really interested in Dubai chocolate like me.
Yes.
And until next time, we'll see you later. Goodbye.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat.
See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.